Hey everybody, it's Bob Kenny again with Draper and Kramer. Thanks again for tuning in. I wanted to again give you a quick update on what's going on. We'll go right to the charts, and then we can get into some other stuff after that. Intraday charts, you're seeing mortgage-backed securities are down 19 basis points. Negative, a red means rates are going up. So this is early morning. You see, we started out down from yesterday. They're projecting that we should be cautiously floating. I don't know if you want to be taking that risk, but you certainly can. I think there's more downside risk to floating than upside risk for rates, and meaning that the downside risk is rates get worse, upside risk is rates get better. What we have on the economic front, some of the readings we had, initial jobless claims increased by about 26,000. The issue there is it's the highest reading since February. And generally, when you start, we've got to keep an eye on this because as employers seem to be not only pausing hiring, but now they're starting to lay off people. And that's generally what happens, obviously, during a recession. Housing is still strong, by the way. We are seeing some anecdotal evidence of slowing down. Not quite as many people, not as competitive as at open houses. We were hearing stories of people lining up to look at houses, and so we're seeing that slowing down a little bit. But housing is still very strong. Again, it could be people trying to move their money out of the markets into real assets like real estate. That could be prompting some of it. Tomorrow, CPI comes out. That's a consumer price index, and that's a inflation gauge. Year over year, it's 8.3%. So that hurts. The Fed likes to keep it at 2% or less, generally above zero and between 0 and 2%. Anyways, tomorrow's reading in May, if what would fall off in the 12-month moving average would be the 0.7 from last year. So if we see a 0.7 increase this year, it should just the year over year reading won't change at all. So that's really what's going on in the news for tomorrow. Again, I don't know. It's kind of tough times to really gauge what's going to happen. I think there's more downside risk to floating than locking. But if you like to play the market and you think that the numbers tomorrow will bear out better bond prices, and by all means float. So, but anyways, if you need something, call me. Still doing cash out refinances for those need some cash out to pay student loans or credit cards or even invest some money. Although, I wouldn't advocate taking money out to invest, but anyways. But call me if you need me, 630-376-0538. My cellular phone is 847-774-8117, and my NMLS is 198253. Have a great day. Thanks again for watching, and we'll see you tomorrow.